I'm gonna keep it rather short because I know I'm the guy standing between you and dinner. So I'm fully aware of my responsibilities. Looking at the financial sector, which I love, it's a great one and biggest part of my life where I made my career. My first money was like trading debt, so I'm trading debt effectively, a Schuldenhändler. I loved it, but that's what it is. I spoke yesterday about my time at Wall Street, so I pretty much spent a lot of time traveling to the US and then living in the US in 2005, when literally the debt was at around 6-7 trillion. And it's interesting, whenever you go to New York, go to Midtown, it's now hidden. It used to be in a different place. I think they have a reason. They have what they call the debt watch. It's like life. And I always go there. Every time I go there, take a picture. In 2005, I'm like, wow, it's like 6-7 trillion. That's a lot of money. Then after the financial crisis, it's just like crossed around 10 trillion. I'm like, oh, that's really a lot. Like if you ask a politician how many zeros a trillion had, I would say 90% of the politician wouldn't know. They have no freaking clue what it means. And now we are actually going to 38 trillion now. We are like literally adding now trillions by the month almost. And doing that math, you can say the annual rate where debt or money printing, doesn't really matter, increases roughly by between 6 to 8%. If you assume 7%, you can actually predict with certainty that we're gonna cross 100 trillion of that in the United States within the next 15 years. 100 trillion. You pay 4% on that, it's 4 trillion. It's around the GDP of Germany. Just paying the debt, the interest on the debt. Now, it's still the United States. They have great growth, they have great companies, they have optimism, and they always think, and I love that about the United States. But ultimately, trust can break down, even for these guys, quickly. Next slide, please, or is it me? I can do it myself, I hope. So here, 1971 was pretty much the year where Nixon decided to actually to get rid of the gold standard and the gold backing, because like that's old people's game. Because why was that? It was the middle of the Vietnam War. The US was running out of money. And so what's annoying, you have gold. And you cannot print gold. And people forget, if you can print money, you can finance bad stuff for a really long time. It's evil. And I, by the way, have to say, I didn't understand the meaning of money, being in the markets for all these years, until I found Bitcoin. I had no clue what money was. Bitcoin changed it. And therefore, 90%, 95% of the Wall Street guys and bankers don't know what money is. They talk about that from the morning to the evening, and they want to have a lot of it, but they don't know what it is. And I was one of them. Gold increased by roughly 150 times. So Alex, I think he showed great charts, pretty much reflects in a slightly different way. Next slide, please. So what's Bitcoin? What was the biggest invention, as I mentioned yesterday, we had at the end of the last century? The internet. Something we use every day, the decentralized network, which allows you to distribute information in a decentralized manner. I can send it to you, Desiree, or to you, Reto, and on the tip of finger, I can figure out the stock market, which I always do. So Bitcoin Max is not really, I own stocks as well. Anytime, wherever I am, when I have internet coverage. Huge revolution. Changed our life dramatically. Bitcoin, that's nothing else like decentralized network, which really allows you to distribute value. Huge idea. First time in history, you can actually separate state from money. The most frustrating thing for governments, and I think some governments understand the power of that one here. I think we don't really understand it completely, and that's why I'm so more and more against this whole like, let's get governments, give them Bitcoin. No, I don't want to give them any value. I want to have less value to governments and more power to people. Bitcoin is doing that. Next slide, please. Now we had early on in discussion, I think Magnus, we talked about adoption rate. That's a slide from on the EDF from BlackRock. So I would assume they checked that. So actually these numbers, according to BlackRock, I should really, but you see I'm very active on X, so I usually give a bit of shit about like who quoted this and who did it. I believe in people should check everything they see. So they were like, oh, that's the source. I don't do that anymore. People should really do it themselves. Verify. So based on that's on-chain users, according to BlackRock, and it's mainly Ethereum and Bitcoin. Based on that, I did the following analysis. Actually, here it is, BlackRock EBIT presentation. In order to reach 300 million users, the adoption rate, it took the mobile roughly 21 years. The internet, 15 years. And crypto, mainly Bitcoin, it's a granddaddy, 12 years. Just to give you an idea of like decentralization, the adoption rate is really massive. And I think it's still, they were just in the beginning, actually. Next slide, please. How big is Bitcoin? That's like, we have to be realistic as well. When we talk amongst ourselves, we think, oh, we are big, we are huge. We are nothing. We are like not even like a dog shit big thing here. Tiny little thing. It's just 1.3, maybe today is 1.4 trillion because it was hopefully $70,000 coin. Compare that to gold, it's roughly 36 trillion. Art, collectibles, cars, 24 cars as well, 24 trillion. Equities, 115. And by far the biggest market is the real estate market, is 330 trillion. So overall, and these numbers can be all over the map. UBS shows, wealth management shows slightly different numbers. You have a total wealth, global wealth of like 900 trillion. Let's assume 7 to 900 trillion. Bitcoin is like not even 1%, not even 0.5%, 0.1, 0.2%, so like 3%, very little. Next slide. What was the return? So Alex showed a 4-year return. The last 10 years annualized was 66%. 66, huge. Now, last 4 years didn't look that great, but 66 over the last 4 years, 10 years. 16 for gold, S&P roughly 14. For S&P, we have a massive track record of like 100-year plus, so it's around 10%, nominal, 10%, after inflation around 6-7%. Gold, bizarrely, we don't have a huge track record because there's always governments getting involved. If you lived in the United States in 1933, I did not, even I might look older, not that old. Warren Buffett lived, actually, he's born 1930s, 3 years old. The government just passed a law, a bill in 1933 saying, you own Bitcoin? You own Bitcoin. Gold, we seize it. You pretty much give us the gold. If you don't do that within 30 days, federal prison up to 10 years. US federal prisons are not very pretty back then, neither today. Not that I know, but here things. So next slide, please. Alex pretty much, I keep it short, talked about that. And I talked briefly then about the cycles as well. What's great about that, Bitcoin is by far the most resilient beast which I have ever seen in my career. So there are two big arguments for me why I personally like Bitcoin a lot. One is it's a resilient beast. It always comes back. You really think you really punch it down and the freaking thing comes back even higher. Beautiful, never seen that. Very resilient. And the second argument I will talk about a bit later is like the decentralized network effect, which really leads to interesting features. So if you see like it went up 370 times and dropped almost 93%, almost 100%, went up more than 500, dropped again by 80, went up 100 times, dropped 80. Now, what you can see goes up less and less, apart from the first cycle, and drops less and less. And now, Alex showed here, I think 52% is like, now we're down, let's say 50%, we're only up 8%. So if you really look at it like that, you can only derive one thing only. And I think the next slide shows that. Bitcoin goes to zero for the last 17 years. Now, I would say, no, Bitcoin actually is in a bull run for the last 17 years. So that's, I think, is my favorite one. Not because I did it, which I did, but it's not like my original idea. That's Giancarlo and others doing much nicer. So what did I do here? Something I talked about yesterday. If you have a disorganized network, then you can actually study the topology of the network. And it's well studied because the internet really allowed that. Studies were done about networks already in the 50s, 60s by this great Hungarian mathematician Erdős and his colleagues. But pretty much in the early 2000s, people studied internet network, decentralized, what actually characterized strong networks. So what it is usually is like you have few very strong nodes. Then you have a lot of people like nodes with not a lot of connections. You have a lot of connections, and that's highly decentralized. And it's really interesting. Bitcoin has exactly the same features. And if you have that, then it's a mathematically a necessity that it follows a power law. So what is a power law? Power law means nothing else. Everybody in school, high school knows the simplest power law is, let's say, take the price of Bitcoin, assume it's linear with time. Then you say, price of Bitcoin is equal some constant times t. T is the number elapsed since the beginning of the first Bitcoin Genesis block. Now, if it's quadratic growth, then it's like price is equal to a constant times t to the power of 2. And now you're like, oh, high school, I remember. Bitcoin shows actually a superlinear growth based on his whole numbers, statistical metrics, with an exponent of 5.7, 5.8, 5.6, 5.7, so different, depends where you start the data series or around that. So what it means, Bitcoin price equals to a constant. It doesn't really matter what the constant is. If you calculate the price, it does, but not really when you take reference points, times the time t since the Genesis block, so 17 years ago, to the power of 5.7. Now, the implied price today would be around 120 to $25,000. So we're far away right now, but it's not really, that just swings around. Now, based on that, you can actually derive what the price should be if we assume the power law gonna exist going forward in 10, in 20 years. And as I said yesterday, it's very simple to calculate. T to the power of 5.7 is roughly t to the power of 6. So let's assume the time, we go double the time. So what's gonna be the price of Bitcoin in 17 years from now? So it's double from today. So you take like double is 2 to the power of 6. What's that? 64. Slightly less than that, 5.7, so like 55. So based on that, you can say in roughly 17 years, the Bitcoin price should be around 64 times, we assume 6, higher than today, using 120,000, the fair value implied by the model. So it's around 10 million, slightly less than 10 million. That's where I came up with the numbers. It sounds hyperbolic. And as I said yesterday, the nice part about that, you can study that. And so we founded the company, the scientific or non-profit organization led by Giovanni Santostasi, two astrophysicists, one guy who did supercomputing, and myself, which is called the Scientific Bitcoin Institute, which actually does all the studies. We raise money in order to employ PhD students to do all this like interesting work, which comes down now as well to the cycles. Was there ever a 4-year cycle? And that's one group member of ours said, no, there was never a 4-year cycle. It's nonsense. And it makes sense what I think he says, because power law implies you have multiplication going to happen. So linear lenses do not capture that at all. Only logarithmic lenses capture that. And based on that, people haven't seen really what happened in 2011. We have actually seen earlier bubbles. And based on his analysis, using Fourier transformation and wavelet analysis, these are like very technical mathematical tools, he derived that actually the bubble, the next big bubble, should occur around mid of 2027, so in 1.5 years. Now, I like that because you can test it. Because that's what I think about importance of all, to say, can we test what we say? And based on what I'm seeing, I will say based on the power law, we shouldn't really see Bitcoin price below 100,000 after 2027. That's like, just these are simple things to say, a boundary condition. If it's below 100,000, then I will say, Bitcoin power law was crap, I forget about that, and you never heard my name. I changed it to Reto. So next slide, please. These are like my projections. Based on the power law now, you see actually at 5 years, the fair value should be around 500,000. In 10 years, 1.7 million. In 20 years, 10 million. What can occur to change this dynamic? Of course, power law or structures like decentralized structure can have weird inflection points as well. Shocks. And what could be a shock? A shock could be indeed that, unfortunately, I think the Bitcoin community was a bit stupid to applaud the arrival of Wall Street. As I said, I never liked that idea. It's actually quite stupid. Why? Bitcoin is 1.5 trillion, 1.4 trillion. It's nothing. And it's easy to manipulate as a trader. It's not even some of the stuff. It's not illegal. So these big hedge funds, the banks, mainly the hedge funds, they give a shit what they're trading. We think they care about Bitcoin. They don't even know it stands for BTC and any of that. But they know how to trade illiquid stuff and to capture sort of like arbitrage. That was my job, to capture arbitrage from the morning to the evening. What do I mean by that? Exactly what I did in subprime space. There were only 1.5 trillion of risk of bonds out there. But we created 10, 20 times more volume in paper money, in derivatives. Wall Street created much more risk out there in form of futures, in terms of derivatives on Bitcoin. And now they trade actually all this paper Bitcoin versus the cash Bitcoin from the morning up and down. Huge amount of money. And then now you use MicroStrategy, do some delta hedging on that one to exploit some gamma effects, like all like things you should never really be exposed to. And I've forgotten it. But it's a very dangerous counterpart and potentially enemy. Wall Street can be your best friend, but there is no loyalty. They would just want to make money. They're greedy. And greed is good. We know that from the movie. I love that, Wall Street, one of the better ones. Wall Street 1, Wall Street 2 is shit. And greed is good, and I agree with that. But that means as well, you better be careful. If the opponent is strong, aggressive, and doesn't give a shit about you, you better be careful. And if he's much better, bigger than you, and that's what I learned as a trader. If the guy on the other side is bigger and has power, do not try to impress him by entering the trade. And I'm going to finish that to give you an idea. In the midst of the crisis, I was called on my desk, says, there's a guy who wants to do a big ticket. Big tickets were up to $1 billion back then for us, with you, Pius. And I said, who is the guy? Berkshire Hathaway, actually Warren Buffett. It was not Warren Buffett himself, it's the second guy in command. So I took him on the line, he said, Pius, this is the trade I want to do. And we do it for big size, you know, we are Berkshire Hathaway. My sales guy, management was quite excited. Berkshire. I said, no. If they win, I lose. I only know I do not bet against Berkshire Hathaway. I would never do that. This trade actually wouldn't even work out for them as well. just as a matter of fact. One of the trades both of us would have lost, but that's, I think, is a lesson. Do not invite strong opponents, and if they come, don't even try to engage too much. Having said that, I'm bullish Bitcoin. This, I think, has a good chance to happen, and I think it has a potential to change all our life. I think it has a potential to change the way we build our financial infrastructure in the future. Thank you very much. Hey!